gross revenue, cost of goods, gross profit, operating expenses, net profit. This is the terminology you must know when running a business.
Six years ago, my wife took nothing but an ideal and faith and turned it into a multi-million-dollar business with multiple streams of income. As a woman possessed, she overcame all obstacles and created multiple streams of wealth that has impacted our family for generations to come. From mental health professional to therapist to author to CEO, she is a constant reminder of the grace of God over her life. Get ready to listen to and take notes from Stenell, the money therapist, as she schools you on money, entrepreneurship, and life skills that was not taught. No more excuses. Wake up!
That introduction was great, husband. Thank you. Welcome back to No More Excuses, Wake Up, where we talk about money, entrepreneurship, and life skills that has not been taught. I am your host, Stenell Myers, also known as Stenell, the money therapist. This week, we are discussing money. But before we go into that, I want everyone to know that my book, Whipping Debt's Ass, is coming out soon. I am excited. There is a lot of hard work that is going on in the back end. Let's get into the topic today, money, understanding revenue and profit. A lot of times when we start a business, we do not understand what revenue is and what profit is. So your girl is going to break it down for you. When you're starting out in the business, a lot of times we just think of the end result is, of course, money. We want to make money. We know that when you are in business for yourself, you're an entrepreneur, that you will make more money depending on your business than working for someone else. And I know that because I work for people all my life, 30 some years. And the money that I have, the money that I created from these different streams of income, these businesses would never, ever, it can't compare what I make now than what I made when I was working for other people. When it comes to revenue and profit, revenue is money that you were paid within that month. So it's people that are paying you for your service. Your service can be such as having people who pay for, let's take me for example, for me to coach them in their personal or their business finances. My agencies that I have, that's revenue that is coming in. But because I have contracts with the state, and when I bill Medicaid, that is my revenue that is coming in. Revenue is whatever is coming in. Say if you have a t-shirt company, products that you sold, clothing, any type of apparel, that is revenue that is coming in. Revenue is what is coming in. If you have a job, that is revenue. I hope that I broke that down for you so you can understand that. The cost of goods. So if you're running a business, the cost of goods is what you spend to keep the business going. What is it that you're spending to keep that business constantly running? If you own a bakery, you're making orders. So if you own a bakery, you have to have the ingredients for those particular orders, such as your flour, sugar, milk, eggs, cake pan. That's all cost. That is your cost of good to run a bakery. Some people have online bakeries where they make the orders in their home. So instead of having a brick and mortar, they are cooking, they are baking, whatever it is. Even if you cook, they are doing those things in their home. That is cost because they're utilizing their oven. If they're cooking, they're utilizing their stove to cook. Some people cook, they make dinners. All of these things are costs. You may not have a brick and mortar, which a brick and mortar will be much more money, but you also do have to take the account that when you're paying for gas and electric and all these different things that you need in order to run your business, you have to account for that when you are writing down your cost of goods, because your utilities bills and your gas will now increase because you now move from just cooking for your family to running a business inside your house. So that is the cost of goods. Now, gross profit. When you hear me say profit, I know you're like, oh, I got a profit. Pause. Your gross profit is your revenue, what is coming in, minus your cost of goods of what we just discussed. That helps you run your business. So your gross profit is after you take care of what makes your business run. Without the cost of goods, you cannot have a gross profit. So once you have your revenue and you subtract that revenue that's coming in and you subtract that from your cost of goods, that will equal your gross profit. When you have that number, it's not over. That's just your gross profit from in to the cost to run. And now you have a gross profit. Your operating expense. Yes, we have another expense. Your operating expense, you are going to subtract your gross profit from your operating expenses, such as payroll, your accountant, or your accountant software. If you don't have an accountant, you may have the software. Rent, if it's a brick and mortar, phone, gas for making deliveries, anything that goes into running a business, which is separate from cost of goods, that makes your product. So, for example, I don't have any cost of goods when it comes to a Second Touch, which is my healthcare agency, because it is not a service that I'm actually creating. It is an agency, but I do have a lot of operating expenses. That means that I do have an accountant. I do have rent. I have payroll company. So there's payroll fees. There are so many different things that I have to pay, such as gas and electric. So they are my operating expenses. What is it that is the cost of making my business operate? So when the staff come in, turn on the lights, I'm paying for that. The rent, I'm paying for that. Anything that is an operating expense. Now, if you have an online business, you may not have so much of these operating expenses. And let me be clear. When I say an online business, let me be clear. Let me go back to the basics. You have your EIN number. Your business is registered in your state. And your EIN number, you have your bank account. You are a true business owner. Everything that is coming in and running in through that business. It's not running in and coming in through your personal bank account. And then when it's running in and coming in through your business, you are utilizing your business bank account. You're utilizing that for that revenue that's coming in your business bank account. And then when you're subtracting your cost of goods, it's coming out of your business bank account. And so you are not, when we get to the net, that net, you're not utilizing that net to go and do things that is not aligned with the business. Because a true business, you want to generate a pay stub. There are so many different softwares out there that you can generate your own pay stub, because you do want to have taxes. You want to have a reputable business. And I think a lot of people don't understand that. Whatever's coming in, whatever's on their card, their debit card, now they taking it and they going to get coffee, or now they taking it and paying bills. And I'm telling you that it's the wrong thing to do. Before I sold my rental property of having it for 11 years, I'm telling you that I did that. And that is the wrong thing to do, because you will wake up like, oh my gosh, why did I do that? Why? You don't get in business to utilize that money if it's not going to be beneficial. You get in business to create what you want, which is a paycheck. That is another episode that I can dive deep into. With the operating expense, it is everything that I want to make that clear, that is everything and anything that goes into running the business, which is separate from the cost of goods, which is making your product. So the cost of goods is what you need to make the product to constantly keep going and going and going and going. But the operating expenses is what operates it. Everything that operates to have that business going on an administrative level accounting software, all of those different things. That's operating expenses. So your cost of goods make the product, operating expenses runs the business. Let's say it again. The cost of goods make the product, the operating expenses runs the business. Again, students, the cost of goods make the product, the operating expenses runs the business. What runs the business? So now let's get to our net profit. We all want to see that net, right? So the net is the money that is left over after all the priorities for that month is paid. And when I say all the priorities, again, we're going to recap. That's the revenue of what's coming in. Your priority number one is the cost of goods. Your priority number two is the gross profit, right? That's your revenue minus your cost of goods, right? So your gross profit is after you take care of what makes your business. And then your operating expense. After all of those things, you take your revenue, you subtract it from your cost of goods, then you have your gross profit. Your operating expense is next, and now you're going to subtract that from your gross profits. Whatever is left, that's your net. Now we in business. We in business, baby. That's your net. Now with the net, you want to make sure that your net is not an amount that you only can go and buy some Fruit Loops with, or go and buy, a couple of groceries. It may be in the beginning. So I would say from experience to keep trying, because when I started a Second Touch, I could not pay myself. Actually, I didn't pay myself for 3 years. Although I saw that it was growing slowly, there wasn't enough money for me to pay myself. The business was making a profit, but if I would have paid myself, I would not have had what I really wanted just in case something happened, like emergencies. And let me tell you, because of my for-profit, it helped me so much with my nonprofit, because with my nonprofit in my after-school program, you don't always get the money you request right away. You have to be able to still pay your staff. And a Second Touch was that savior for me. I didn't have enough money to be able to hold joy until I was able to get my reimbursement and then pay myself at the same time. You want to make sure that your net profit is not a hobby, because if you're not bringing in so much money after a certain amount of time, then that could be a hobby, and you really want to rethink that. I hope this was beneficial to you. Understanding revenue and profit. And revenue is always what comes in, and your profit is what's left over. That is your net after your cost of goods, the things that you need in order to constantly have that product or those services flowing. And knowing that once you have that revenue and the cost of goods and you subtract that and you have your gross profit, it's not over. Once you really understand the math of it and you treat a business like a business, you will succeed. A lot of times we fail because we give up because we don't know. And I remember that I almost gave up. And if I would have gave up, I wouldn't be here right now having this conversation with you about revenue and profit, or I wouldn't be here having this podcast about money, entrepreneurship, and life skills that was not taught. Because I went through what I went through was a life skill. A young lady quit on me out the blue. I remember I was sitting in my truck, got the email, and she just quit. And when she quit for 20 minutes, I quit too. And then I was just having a whole moment in that car. Every thought that I had, it was so hard. It was so difficult. But every thought that I had, I was like, I'm done. I'm sick of this. I can't keep staff. She was like the third or fourth staff that I had. I trained myself on the job to learn the job. So if I would have gave up. So I encourage you not to give up, but to really understand what you're getting into. And you have to know the terminology. You have to know what a revenue is, what a profit is. Someone asks you, you watch Shark Tank, you have to be able to understand. And this is just the basics. And so your net profit, you want to give yourself time when you're starting a business to be able to create a great net profit. And so when you're seeing your numbers and you're writing it down and you're writing it plain and you have goals and you're seeing the numbers, what is it that you need in order to quit your job? What's your number? What is that number? You need to know that. And everything that comes in is not for you to spend. When you starting a business, that's not for you to take and spend. It's for you to keep growing, keep saving, keep producing products. And until you get that, it's not going to work. You have to keep going. 3 years. I am not telling you a lie. 3 years. I did not take a dime. Actually, into the 4th year. Was it the 4th or the 5th year? Yeah, I think it was the 4th year. Yeah, the 4th. My manager was making more money than me. Before I let you go, true story. Something happened with the payroll. We have ACH payroll. Something happened on the, I can't remember what happened, but we had to call staff to get checks. I had to call payroll company and I said, I need checks here immediately because there was an error on your end and my staff is going to get paid. The checks do not come inside the envelope. The checks come in on their own. And so you have to put them in their envelope. And I was actually in Atlanta in a conference. And I called my manager. I said, hey, I need you to go to the office. And when you see my check, don't laugh because you get paid more than me. And I said, by the way, don't look. But I know you're going to look. So I say all that to say is when you're starting a business, it's not about how much money that you are bringing in yourself, me, Stenell, not a second touch, me, Stenell. It's about how much the business is bringing in. Because that money from the business, I'm going to take that and these banks are going to see that and they're going to say, okay, this is how much is coming in. They don't care how much money you're bringing in. They don't care how much money Stenell bringing in. They want to know how much money the business is bringing in. And so the business is what made sense. You want to make sure that your business, that bottom line, that net profit, that's what matters until you're able to pay yourself. All right, y'all. That was your lesson on understanding revenue and profit. So y'all better go out there, you smart people, research and do what you need to do. Remember, no more excuses. Wake up. Thank you for listening to No More Excuses. Wake up. If you love the show, please subscribe, rate, and review on iTunes or Spotify. To learn more about me and my different agencies and what I do, go to StenellMyersEnterprises.com. While you're there, check out Money Therapy Institute and watch my video where you will see me doing a little acting, showing you how I fought and kicked down closed doors. You can also click on Stenell the Money Therapist and get my free budget spreadsheet. And of course, you can email me at contact@StenellTheMoneyTherapist.com. I'm also on social media on Facebook at Stenell the Money Therapist and Instagram at Stenell the Money Therapist. No more excuses. Y'all know what y'all need to do. Wake up. Hey, smart people. I have a 3-month one-on-one personal or business coaching program. As you all know, I paid off $50,000 in debt in 1 year. I will teach you how I stayed out of debt using my burner method and personalized spreadsheet I created to fit my lifestyle and keep me on track. You will learn how to understand your money communication style using my financial treatment plan. Also, if you own a small business and you feel stuck with cash flow or feel disorganized, I teach business owners and self-employed entrepreneurs such as yourself to financially maximize your money, build wealth using your business income, and retire working on the business while your business continues to run, such as myself. You can book a call with me. The link is in the show notes.